morning. It's Friday, the 12th of February, 2021. 6 weeks have already passed of the year. That's pretty amazing. We've had a quiet week. We'll talk about that in a second. Here we go. This is the reason I put this up is we had a pretty calm week. Our average stock market movement for the day, for the last 5 trading days, and on Friday mornings I talk about last Friday's movement to the close last night. We averaged about 74 points a day. That's a very calm day, but what's important to point out that is if we would go up on average 75 points a day, the market overall would return northwards of 14%. So I actually look for about a 45 point a day average movement. The fact that we had a quiet week this week, people kind of bored with that and they wish it was more. I don't. I like that movement. I like that we had an average of 75 points per day. That just builds up. It's nice and slow. It's nice and steady. And I would rather see, I've always kind of related it to a little boy on an escalator with a yo-yo. The yo-yo is going up and down. That's great. It's exciting. At the end of the day, it gets to the same place that his shoes get to. So watch his shoes instead of the yo-yo. The shoes they're not as exciting. They don't move as much. It's kind of what we had in the market this week. Next week will probably be different, but it was a little bit enjoyable to have a calm week. So let's talk about what we did. A couple of things that concern this week. The one thing that came up is the Dow Jones Industrial Average over here on the right-hand side. You can see some flexibility over here starting about the 10th, 11th of January, moving through the week. And this is kind of a wide shot, so we're not picking it up, but we're pretty happy with the average movement over here. And you can see we're still up back there. We're going back 52 weeks. And you can see that we've gone up over the 52 weeks. We got past that hump in March. And so the worst thing anybody could have done was panic and get out of the market, because it caused a couple of months of consternation, a couple of months of worry, but we recovered and we seem to be doing nice and strong, fine performance. So we're pretty happy with where we are right now. We'll keep an eye on that, obviously. Then we have the Volatility Index. You can see that we had a pop. That Volatility Index was caused significantly by the GameStop issues. There you go, over on the right-hand side. Now we're back to where we're approaching 20. So as you can see, we're starting to flirt with a low for a 52-week low back on that one-day movement, which is great. The things are calming down, which points to our calm effect we had this week. We'll keep an eye on that and see how we go as we enter the seasons, the summer and COVID. And we'll go from there. But right now, it keeps trending down. We have a pop once in a while, which is very normal. And we'll keep going. Next. This is our world markets. And over on the far right-hand side, you can see what we've done since January 1st. Point out again, the United Kingdom is at 1%. That's the lowest of the major indices that I watch. 1% for the year. That's not terrible. If they've done that in 6 weeks and you can play that out, it still shows a pretty weak performance for the year. So we'll keep an eye on the UK to see how that goes. They are coming out of lockdown here pretty quick by sections, and we'll see how they take it. But the interesting part is that if you look up at the top, the Nikkei, which have a 7.72% return right now, you got to remember that country shut down to everybody except citizens from January 1st, actually a little bit before January 1st, through the end of January. So you couldn't get into the country unless you were a Japanese citizen for that first month. Yet their stock market has done pretty well. And we're a global economy. I expect it to be affected a little bit more. Our big performer is NASDAQ. And again, that's a a technology heavy index, up 8.83% for the year. Hong Kong outperforming everybody. That's not that big of a surprise, but it's still something to take note of. Our Dow Jones Industrial Average 2.7% for the first 6 weeks, pretty solid. And then the S&P 500, which is the index I typically use for benchmarks, 4.25% from January 1st. That's more of a good illustration of the wide broad of companies that we deal with. So that's kind of the one that I use as most of the benchmarks. That's what we watch. But right now, everybody's doing pretty well for this early in the year. And our philosophy is that as the first couple of days, weeks go in January, so goes the year. So we're seeing good signs for how the year will go out. And unemployment claims. So we had another unemployment claim where we were above 750,000. This has been pretty consistent. You can see that that's just been trending since, well, for a long, long time. My concern here is comments made by Jerome Powell on Wednesday, and I I understand what he's saying. He thinks that unemployment actually is closer to 10%. We're reporting 6.3, and my concern is that they're looking at a couple of things. One is they're looking at some anomalies on the reporting, never a good thing. So we have to keep an eye on that. And the other part is people that have given up looking. There's always that number that becomes a factor. So right now we've got unemployment at 6.3% officially. He thinks it's closer to 10. We know that the high was a little over 14% in April, and we'll keep an eye on how these numbers go. My concern is that continued $750,000 filings and more every Thursday morning, and we've got to keep an eye on that, see how that goes. That really needs to drop down to where it was back there. If you look at that orange line, January, February, March, that's about 200,000. That's extremely normal. That's about a 5% unemployment rate. So we need to get that line back down, and we'll have to keep watching it. It's drifting down, but not quite as fast as we want to see it. Then we have our U.S. sectors. We still have gas and energy just trailing, and that's a little bit of a surprise. The price of oil is going up. OPEC has cut production specifically to get their prices up. The problem here is there's just not as much travel going on. The travel and leisure demand is still quite weak and will remain that way. So long term, we still see oil and gas as a place where we think there's potential for recovery, a little bit of recovery, but right now it's just not doing it. So 11% for the year is not too bad. It really needs to have a good pop. And then we have our worst cases for the trailing 12. Telecommunications down 9.5, utilities down 8.3, not a big surprise. Financials, I would call down 0.9% flat. Then you have consumer services, consumer goods. Those really are strong, and that's a lot of pent-up demand. We'll see how that goes through the year, but right now these are the rankings through. You see 2021 year to date in the middle, and then the trailing 12. And again, I'm using the trailing 12 because in about 2 to 3 weeks, we're going to start seeing the numbers pop quite a bit, and it's an anomaly due to that deep drop in March of last year. So we want to be able to account for that and have a real number to look at. And the CPI came out this week. Its consumer price index is up 0.03%. I'm not even going to call that an increase. That's just essentially flat. Today we'll get the consumer sentiment. The preliminary number is it'll be 80.8. That's actually good. Our forecast was about 79. I did not get that number yet, but we'll see how that comes out. I had said this week was quiet. Next week's going to be the opposite. Now we don't have a market on Monday. We're closed. But next week we see the retail sales report. That's retail sales without automobiles included. Business inventories report, National Association of Home Builders Index, housing starts. The FOMC minutes from the last meeting will be published, and we'll pour over those and see what's in there that we need to pay attention to. The import pricing index is a big deal, and that Philadelphia Fed manufacturing index is a big deal. So this is not all the reports that come out next week. This is about maybe 25% of them, but these are the ones that we pay a lot of attention to, and we'll be trying to touch on if they need to next week. But I don't expect to have the time to do an FOMC minute report next Friday, but probably the Friday after. That's going to be a pretty long report. And the rest of these, we'll just see how it affects us, but that's what's going on next week. Our calendar is pretty simple. We're all closed on Monday. The bond market's closed, stock market's closed, all exchanges are closed, and the banks are closed. Daylight saving time starts March 14th. And then you have all these other events that we've been keeping in track. I'm starting to wonder if the cold might have something to do with the economy a little bit. I mean, we have a national freeze out going right now. And here in our area, we're not expected to see above zero for another 10 or 12 days. Our high, I think our high Sunday is going to be 1. And a friend of mine said that once it's zero, that's just not even a temperature. So I think the cold is probably keeping some of us down a little bit, and we'll see how that goes. We've started to get vaccine calls, and that's a good sign. That means we're spreading out in Johnson County and Miami County both. I get mine today. I got a call last night. So my wife gets hers next Thursday. So we're starting to see that swing in. That's a good sign. The next part is to implore everybody to go for that second shot. One of the problems we have is people are going for the first, they're not going back for the second. That negates the first shot. So in those cases where the booster is required, well, you got to go back. We're not seeing 100% cooperation on that. By March 1st, all the schools will be back live. We'll see how that affects us. They'll be back live full time, and we've got to see where we go with that. So there's a couple of things in our future, but right now we've had a quiet week. That's good. Next week we've got a shortened week. I hope that that's good, and if these reports come out even fair, then that'll be nice. The consumer confidence report, when that comes out, if we're anywhere near what we think, that's a good sign. So we're building up some momentum. We need to get through some weather and go from there, and I think we'll be okay for the year. So we'll be watching that and taking care of it. Remember, we're not here on Monday. The bank's closed on Monday. We'll be back here next Friday morning at 8 o'clock, and hopefully have some summary on the reports that are coming out. If you have any questions, let me know. Let Mallory know. We'll be happy to address them for you. For everybody's interest, remember, this is not solicitation to buy or sell securities, but GameStop is now back to 51 bucks. So that little excitement is kind of gone. Give us a call if you have any questions. Thanks for joining us. If you have some friends, pass this out to them and let them know we're here. This is a commercial-free environment, and we are always available to answer any questions we can, and happy to do so. Thanks for joining us. Remember to stay warm this week, get your vaccine when it's time, and we'll see you 1 week from today. Have a great week. Thank you.